Morning, and it's July 2nd at 10:49 UK time. And let's take a look at Ethereum, and Ethereum being the number two crypto asset. And that's the asset being the token itself. Ethereum, I believe it's around sitting at 240 odd $billion in market cap, around 40% that of Bitcoin. So it's a huge player. It's a massive player, and that's not taking into account what is built on Ethereum, all the stable coins, Tether, USDC, etc., all run on Ethereum. So adding into the market cap of everything that Ethereum supports, I believe it is larger than Bitcoin, and uh, this is because it gives the tools to the developers to build and innovate. The tools and to build and innovate are not available on Bitcoin. This is why Vitalik created Ethereum in the first place. His visions and ideas were not allowed to be built upon Bitcoin. He was pushed out of the community, right? And let's look at Ethereum from the start of the year, December 1st. We're looking at a price around 745, 750, right? So we are up still, even at these depressed levels, approaching 3x from the beginning of the year. Try and find that in your legacy markets, right? It happens occasionally, normally on large pumps, but is it sustainable? And if we take a longer term view, has Ethereum really been in a proper bear market? Bear market ever? Was this a bear market or consolidation? Right, you got to decide for yourself. If you are continually accumulating your favorite crypto assets, you should never really be in the red. If you get exposed to margin trading, obviously, that is what leads to wreckage, and that's why you need to keep your trading in a siloed kind of a portion of your assets, a few percentage points at that. Five, I would say, being max. 5% of your total assets and your crypto assets being allocated to leverage trading, and at some points, being having some leverage trading opportunities, they can really grow your portfolio, of course. But the greed is what leads to excess margin, excess allocation to trading and to the futures platforms that are so readily available in crypto. But the good thing about all this leverage available to retail for the very first time, I believe, is that you get to learn extremely quickly that prices don't always go up. Prices don't always go up. They indeed sometimes they go sideways. A consolidation before break. We see that. We see large dumps during external events now, and that is kind of the issue post 2017. Post 2017, when this was a pure retail market, right? Um, the ongoings of what was happening in the wider financial market didn't really affect crypto because it was just two-way kind of ish market, a two-way kind of market. So majority of the action is towards the upside. But now with BTC, Bitcoin CME futures launching, and paper products available on Wall Street, it kind of complicates things, right? Not saying that, look, we went from around $83 to 43.80, right? A huge increase. What is that? Around a 50x, and we're still, like I said previously, at 3x from the start of the year. 3x from the start of the year. So let's kind of dig deep and see where we're at. We're below the 18-day average, struggling to get above it and stay above the 18. And if we throw on a bar candle, can we see if it's in any sort of trend? Currently, high or low here, obviously. High low here. Now we've got a higher high over this one, and trying to form a low that is somewhere in this region, right? And sorry for the plus and minus sign popping up, but yeah, we are trying to find another higher low, and if we take out this level here, what would this be? 22.89. It's actually not too far away, $250 away. Again, you would have a series of higher highs and higher lows. Good stuff, potentially, right? Potentially, the trouble is if this is a bear market, as older crypto heads are used to, which induce max pain of 80% plus. 80% plus. Where would that take us? A high of 4380 minus 80% would take us down to sub 1,000. Sub 1,000, which would be around here. And is there potential? Yeah, kind of, right? If it forms another low closer to these lows, and then it could roll over. $1,000 Ethereum is still on the cards, right? $1,000 Ethereum would kind of bring it down to this support region. And is it a support region? Can we go back? Let's see, $1,000. That'll be the worst case scenario, right? Yeah, you can kind of see this support level here, 850. All right, and yeah, this gap, I mean, action never really got tested. It was explosive upward moves, right? So that's the worst case scenario. You need to make sure you know what is the worst that could possibly happen to your asset, right? Again, let's see if we can dig into if we are indeed actually bottoming, though. Are we actually bottoming? Let's take out the Bollinger Band and let's throw on some tools to give us an idea. A pitch fan. I haven't used this in a while. A pitch fan. Very useful in downward trending markets, right? There we go. I nearly had it. And where we draw the first kind of channel, maybe there. I would say let's dig deeper. Possibly there, right? This is kind of making sense. This is kind of making sense to me. So, still some work to do, right? Still some work to do. As you can see, this is the main down thrust. And so this gives you a time element component to the price action, right? It kind of gives you a visualization of where we are going and what work is required to do, right? So all this action here, very violent indeed. And now we're kind of seeing this. That's probably too broad. It's probably too broad. There we go. I think that makes sense. That indeed makes sense. So all this action, down thrust again, beating this low, and now a potential recovery. Still needs work to do, right? Still needs work to do. But at least you now got support levels on the immediate price action historically, right? Right here, you got this low here. What was this low? Let's take a quick look. Candle. Okay, so you've got two zones here, 1830 and 1740, 1700. Okay, so this current down move, if it pops down below 2000, yeah, it's not. I would say this kind of top is actually more supportive, right? If it kind of gets down below these tops, now you're kind of looking at a free fall event. A free fall event, but there's still a tiny bit of action to support it, but not too much, right? So hopefully we don't see that. But this pitch fan, again, will it go up, rebound here, and kind of come back down and then pop? That's potential. But again, these pitch fans are what I just drawn right now. So how much validity do they really indeed have? How wide do you draw these pitch fans, right? Have you already broken? That's another scenario right there. Have you already broken? And I would say this is too large. That action is too large. So I would say this is probably more likely right here. More likely around here. So pop up, kind of testing this imaginary field of action, zone of resistance. So let's get rid of that. And my favorite indicator is actually the momentum structure, created by Michael Oliver of MSA Strategies and codified by Michael Wang. I find this quite useful indeed. Rather than just looking price action alone, it's, again, I'm not too sure how it's coded, but it gives you either a positive or upward momentum when price is actually sliding. We kind of seeing divergence, right? We are kind of seeing divergence popping up into the positive territory, which is supportive if it can hold and rebound here. If it can hold and rebound here, right? So this is on the 4-hour candles as well. So let's take a quick look at Bollinger Bands. They are useful in determining low volatility events, and actually more useful on the daily. Okay, upper Bollinger Band. We are at 2612. Retest the lower Bollinger Band will be 2150. Is that correct? No. 1689, that is correct. So 1689 on the lower Bollinger Band. That would create this shelf of support. I say support with a quotation mark, because triple bottoms and triple tops don't normally exist, right? So coming down here with violence and a small bounce, not healthy. I do not want to see that. Okay, and let's throw another stochastic. Stokes either going sideways or about to call that back down. Kind of in the area of a no man's zone. Here you can see bullish divergence, obviously. Low, higher low, kind of giving you this boost, right? Kind of giving you this boost up in prices, but they're going sideways right now, as opposed to this period here where the Stokes are embedded. Anytime you see the stochastics in a position where most people will say overbought, but if it locks in for a period of, I'll say 3 days. So this will be 1, 2, 3. You can see how strong this is, which led to this. Was it a blow off top? On the 4-hour, on a daily candle, on the log chart, it doesn't look that blow offy, right? It's not vertical price action. It's strong move, 2,900 to 4,380, but it's not vertical. Not as vertical as some cryptos can do, right? So, yeah, let's take off stochastic. Let's take off the Bollinger Band. And maybe let's throw on a fib retracement. Sorry, excuse me. Okay, let's try and grab this top. Why is that inverted? Let's do a trend-based fib. Okay. 4,380. Boom. Yeah. Okay. Okay. What does it tell us? If BTC is to resume an uptrend, hit these 6-figure numbers that even Alex Mashinsky is talking $160,000 Bitcoin. Alex Mashinsky, his price calls are quite good when he does come out with them. I think he was calling for a warning at BTC during April. Is calling it market overheated, and because he actually sees the mechanics of what's going on behind the scenes, behind the price action, because the Celsius network deals with the borrowing and lending, right, of these crypto assets. So when he makes a price call or gives you a warning, you should better pay attention because he has the underlying data. I believe he actually called for a BTC price in the low 30s, which did occur. Obviously, we went down to 28,800. But he's now reverse course and calling for $160,000 Bitcoin by the end of the year. And if ETH is to flip, as we kind of seen a chitter and chatter on CNBC, Jim Cramer's sold all his Bitcoin. He's going hard into Ethereum. Apparently. Again, talking heads on CNBC. Sentiment indicators, normally contra indicators, so beware. Remember Brian Kelly back in 2017 teaching how to buy Ripple at $3.28 after being the number one asset, running up from sub a penny, I think fractions of a penny. So that Ripple was the highest appreciating asset of 2017, and you had the CNBC analyst telling you how to buy it at the exact top. So be careful of those guys. They are not your friend, and often don't actually trade this stuff. They are there to give opinion, a general pump to markets, and they're often in bed with certain parties. So be careful. But again, if Bitcoin is to go on to six-figure numbers, the general kind of consensus is Ethereum will flip at some point. Will it stay flipped, which means a bigger market cap than Bitcoin? It should. Long term, it should. So it could be a temporary move, a month or two, and then kind of signal the top of the total total bull market, right? Total bull market. Bitcoin topping at 150 odd. ETH, where would that be? ETH to flip Bitcoin. You're looking like a 10x from current prices. Right? I believe that's around 16 odd thousand. Okay, so there is still potential. Be careful though. We're kind of watching and waiting. These markets are unforgiving. They are unforgiving. Let's take a quick look at Bitcoin. How is it doing today? Literally have not looked at Bitcoin price. 32,838. I kind of had this inverse head and shoulders. That failed, didn't it? That kind of failed, didn't it? But it's looking weak. I would say it's looking weak. Always this exhaustion of sellers. It's hard to determine. It's really hard to determine. That is why trading is hard. Dollar cost averaging into your assets is generally the way to go, right? And how is Bitcoin doing for the year? Still positive, but barely, as opposed to Ethereum, which is still almost 3x up from the start. Yeah, we shall watch and wait, right? This head and shoulders, if the larger one, this being the head, cannot play out, right? Cannot play out. That would result in the minus 5,000 target. Crypto assets don't go bankrupt. Bitcoin miners may have to relocate, obviously, from China to Texas. But as Mashinsky was saying, there's a lot of investment, even by his own company, Celsius, I believe, $500 million investment into green Bitcoin mining in Texas. So there is some bullish development still going on, but the bullish news is not being displayed in prices, which kind of says bear market, unfortunately. So let's watch and wait. Let's see